Time for the market report. Prices back on the downswing.
Except in the main row crops, that would be corn, soybeans, and wheat. And we'll get into it. But first, the numbers. What were the week's biggest gains and losses? And then, with cattle prices fluctuating, what's moving the markets there? And finally, with beans and corn moving up, how long will it last? We'll take a closer look. So, markets closed the week back on the downswing. Corn, beans, and wheat still in the green while livestock falling. Let's take a look. The week's biggest gain, lumber up 23.5 bucks, nearly a 5% increase from the previous week. The week's biggest loss, soybean oil, down more than 2 cents, and that's a 5.25% decrease from the previous week. So, cattle prices still going down, but slowly. It's not been a dramatic shift so far, and the herds are still recovering. So, what's the cause? Extension livestock economist Josh Maples says it's all about volatility.
Something that is interesting considering all of these good cattle news that we've had recently. Yeah. However, cattle prices themselves have kind of declined a little bit over the past few weeks, despite having a few ticks up here and there. So what's the cause of that decline?
Yeah, I would narrow it down to two particular things. One is just volatility in markets, and this is especially true for the feeder cattle futures market or the live cattle futures market. We've seen pretty significant volatility in that futures trading. Really, over the past 2 or 3 weeks. So we saw some big drops. We've seen some ticks back up. If we look at the cash prices, so the prices that producers are receiving whenever they go sell their cattle at stockyards, we have seen prices tick down just a little bit. Some of that, Zach, I really do think is seasonal. September and October are typically our lowest seasonal periods in terms of prices. If you look at average prices throughout the year, October is usually our lowest month, and then September is the second lowest month. It's because that's when we sell most of our calves. If you're looking at these calves that are getting weaned and going to the stockyard, the big fall run, I think we're going to see more of that seasonal impact this year. We didn't see it at all hardly last year. Last year, prices just went up throughout the year. This year, it seems like we're going to see some of that seasonal pressure to where we actually do see a dip in prices in September, October. I'm not convinced it's this fundamental shift towards lower prices. Supplies are still really tight. So I don't yet think we're heading towards a overall lower price environment. I do think it's just kind of a disruption that we're going through right now because of volatility and seasonal patterns.
In our row report, corn, soybeans, and wheat futures still trending up. So what's that cause? Well, this year's harvest off to a rough start, according to the USDA Crop Progress Report, and a market analyst weighs in from the technical side. In the top 18 corn-producing states, denting is reported at 74%, slightly lower than last year. Maturing is at 29%, the same as last year. Condition shows 64% reporting good or excellent. In the top 18 soybean-producing states, setting pods is at 94%, the same as last year. Dropping leaves is at 25%, slightly lower than last year. Condition shows 52% reporting good or excellent. With this context, market analyst Ted Seifert talks about how things look from a trader's perspective and what's likely to come.
We're currently roughly 5 million metric tons behind where we were this time last year on our new crop export sales. The USDA has the exports increasing by 150 million bushels, so that means we're about 9 million metric tons behind where we need to be to hit the USDA's number. So we need to average about 1 million metric tons better than last year each week, so somewhere in the twos. And that's a growing concern for me. I think without a major problem in Brazil, it's going to be a very big struggle to get to the USDA's target. And the USDA is already projecting well over 560 million bushel carryover. So the soybean story, in my opinion, I think is getting more and more bearish, while the corn story is getting a little bit less bearish. But I'm really worried about what happens for soybeans here, not only into harvest lows, but also how the planting mix and the jockeying for acreage is going to go, because I think soybeans should be the big loser. I think corn is the bigger winner going into the end of the calendar year, going into planting. Corn, I think, can still buy some acres, right? It really, I think, needs to. And 420 corn, 430, 440 corn doesn't really get us all excited because interest rates are high, although it could be coming down. Inputs are still high, right? So what does corn have to do to really get the acres that it needs? And so I, again, am optimistic for corn. But to some extent, I think the soybeans, while rising tide may lift all ships, soybeans, in my opinion, really should lag behind, unless there's a major problem in Brazil.
And that's it for a deeper look into the markets. We seem to be in a flux right now, too early to harvest to see what's to come, while livestock looking for something to hang on to.